Hi, I'm Dan Wilton, the CEO of First Mining Gold. First Mining is advancing 2 of the 10 largest undeveloped gold projects in Canada. Our Springpole Gold Project, where we're advancing and looking to submit our final environmental assessment next month, and our Duparquet Gold Project in Quebec.
Dan, good to see you here with Precious Metals Conference in Colorado Springs. Really busy over there.
Yeah.
Lots of money over there.
Yep.
If you can't shine at a time like this, there's something wrong, right?
Well, you know, we've talked about it for a long time. Like, I think our portfolio was made for a market like this. People are looking for the leverage that big assets give, you know, and for us, that we can quantify it. It's $250 million US of after-tax NPV for every $100 in the gold price. You know, you put that in the context that the gold price today is $1,000 higher than when we did our PFS, or what we ran our PFS on at Springpole in 2021. Massive leverage.
Right, so if you look into the market, look, I take what you say.
Yeah.
We've been talking about this since 2019, 2020, where you said you got to set this up for markets like today.
Correct.
Okay, so remind people who've not heard the story exactly what you've got today, and then maybe if you can talk to the market and what you're seeing that M&A happening with.
Yeah. No, so, you know, we've got 2 5 million ounce plus gold projects in tier 1 jurisdictions, well drilled out, geologically understood, and advanced stage in terms of permitting process, particularly at Springpole. So, you know, we've been in the environmental assessment process since 2018 and submitting major milestone next month, submitting our final environmental assessment, which would have us targeting environmental assessment approval by the end of 2025.
Right.
That's not that long away when you've been at it for 6.5 years.
Is that how long it takes to kind of put all the, well, the EA bit, was that 6.5 years?
EA bit, we entered the environmental assessment process in February of 2018.
Wow, talk about barriers to entry.
Yeah, well, that's it, right? And so there really aren't shortcuts to get through that.
Yeah.
You can scope smaller projects. You know, some projects have less disturbance and can make it a bit easier, but for us, you know, we had a project that we knew we had to go down this path. And when I joined in 2019, that was always the strategy, is to have the project ready for when the market's going to need it the most.
Right.
And I think we're there. You know, we really have, you look at the pipeline behind Springpole in the EA process, it's very thin. And we know it takes big projects 5 years to get through that process. So we know what those gates are. You'll know nothing's going to sneak up on you and all of a sudden get a permit, right? Like, we know that because we have done the hard yards.
Yeah, and getting harder, I think.
Yeah.
For let's say, for those behind.
Indeed.
We've spoken to a lot of producers last week at Beaver Creek. We've spoken to a few already this week and a few more to come. Pretty much saying the same thing. Says there's not a lot coming behind. They're looking to, you know, fill up their resources, looking to fill up their reserves, and not a lot of choice, because, you know, just because producers are producing doesn't necessarily make them a good acquisition target.
Right.
Same could be said of, you know, development companies as well. So in terms of the kind of the number of players of the right size, in the right jurisdiction, with everything done and ticked off, because no producer wants to go through a EA permitting process.
Any kind of EA or permitting process, for
Using rarefied air.
I think so. Yeah. No, I think that's exactly it. You know, we've got, with Springpole, it'll be one of, I would say, maybe 2 or 3 sizable projects that could be built in Canada in the next 5 years.
Right. And the money seems to be around for that.
And I think the money is around for that, but more importantly, I mean, what I've taken away from the last week is all those corporates that you were talking about are starting to realize that they need pipelines. They haven't invested in their pipelines. And now when they need to add projects and add ounces in scale, they're just not available to add, you know? So people are also coming to recognize, I think particularly with the Osisko deal last week, like, we're getting to a point of real competition over resources where we haven't had that in a long time. When I started in 2019, there were at least 5 other large-scale, you know, open pit gold projects in Canada that had mostly gone through their permitting processes. But people told me, like, Dan, you're crazy. The world doesn't need another 1 gram ore body in Ontario, because you know what? Côté's never getting built. Magino's never getting built, Hard Rock's never getting built, Blackwater's never getting built, Valentine's never getting built. Well,
guess what?
You fast forward to today, most of those are pouring gold, right? So, but then you look at what's coming forward, And unless you've done the hard yards, and it's been really hard yards over the last 5 3/4 years that I've been here, but we've done the work. And so now I think it does put the projects in a pretty interesting light.
It does. And I think those will be tough years.
Yeah.
Really tough years.
Yeah.
It's tough for precious metal broadly, tough for juniors broadly, money just not available, certainly not at a good price, right? Because of the valuations.
Yep.
Producers are throwing money out at the moment. They are making money hand over fist.
Cash flow is crazy.
Cash flow is crazy, and they've got to do something with it. They've got to do something more than accretive, really valuable for the future. We're seeing these few deals that we keep talking about. The type of deal that might be available for someone like you to take advantage of in that kind of positive cash flow environment would look like what?
It depends. There's a bunch of different ways that can play out. But for us, the primary goal is get through the environmental assessment process. And in that process, we're very keen to get to understandings, relationships, and agreements with the Indigenous communities we're working with. I think you get a project to that state, and then whether that's an outright acquisition of a project, it's possible, whether that's attracting funding to the project for the next stage of, call it getting from EA approval to construction ready. All depends on, how dilutive that's going to be to the company, which is what is your share price going to look like at the time? Or does that look like a partnership? And one of the beautiful things about Springpole is it's got a production profile that is, 300,000 ounces a year plus. So we have some great examples in the mining industry, and the one that I always point to is Gold Road in Australia, which today have a couple of billion market cap, but Gold Road partnered with a partner to build out a mine about the same size as Springpole. And they own 50% of it. It's being operated by the other partner. It's a really, really good outcome if you think about what half of a 300,000 plus ounce a year producing mine would be worth. If you have a partner that takes away a lot of that construction risk, brings team, experience, balance sheet, I think that's a pretty interesting outcome for the shareholder.
It is, and I think what current shareholders might look to, maybe people looking into a project like yours, looking at is, if you look at a Cisco Mining, that's a 65% premium off of, I'm going to argue, a lower base than it should be. So that 65 kind of looks impressive right now, but the reality is, it should be more. Well, and you've got to protect yourself from that potential position in terms of the type of structure that you could do on an asset basis, surely.
Yeah, well, listen, the way that you protect yourself from that, the only way you ever protect yourself from that is competitive tension, right? In the end, and that's really what brought the 65% premium to a Cisco was it's more than one person at the table, and in the end, they all had to compete to own it, and Goldfields won, which I think is a great outcome for the shareholders.
Well, it's a good outcome for Goldfields too.
A great outcome for Goldfields too, because they know they're going to be mining there. I was talking to someone from Goldfields yesterday. They're going to be mining there for 50 years, right? Like this, it is a genuine world-class asset. So that's, I think, really interesting. But remember, that started as a 50% JV where they committed to put $600 million into the project to get their 50%. Well, a deal like that could go a long way for a first mining. We just need to get the project to the point where, we get through quantifying, understanding the key risks that we've been working on addressing the whole time that we've been moving this forward on the environment community side.
It kind of feels like for you, the message is the same, but it's more believable now in terms of it feels close.
That's right? One of the things we've really heard this week was like, I didn't really know you guys would ever get there, but we have, and we've got there through tough markets. What a lot of people don't give us credit for is we turned the rest of the portfolio of assets that we have into $60 million plus of cash over the last 4 years that's gone into development without shareholder dilution.
And obviously your cash position and your equity position goes we'll call it liquid, your liquid assets. That'll get you through past the EA delivery.
Right now, not yet. No, we're going to need to find some more financing. But as we always said,
but you're doing stuff. That's
we're doing
the
lots of
reason why.
Stuff. Yeah, exactly.
So maybe run through some of the activity. I noticed some drilling and so forth. What gives the list of things that you're focused on?
Yeah, so key activities coming up. Certainly EA, final EA submission at Springpole. And that's going to have a lot of milestones in that process over the next 12 to 15 months. So I think it can give investors a real sense of progress as they follow it through, which is important. We've got some really interesting work happening at Duparquet, where we're looking at really a higher margin development opportunity, starting smaller, starting with some of the higher grade opportunities that we have at the project, and think that's really going to catch people by surprise when they see how robust we think that is. Targeting an updated PEA in Q1 of next year, so we can kind of frame that. And at both projects right now, drills turning, lots of exploration success at Duparquet, because we always need to remind people this was a deposit mined down 500 meters in the Abitibi, where the real mines generally don't start till a kilometer down, and it had an endowment pre the mining that happened from the 1930s to the 1950s, an endowment of 6.5 million ounces in the top 500 meters.
Okay.
Like, remarkable endowment. Measure that against any project in the world, and almost untouched below 500 meters.
Right.
So we're starting to unlock some of those real controls of higher grade mineralization, and we're well funded for exploration, probably for another 20,000, 25,000 meters there.
Okay.
Yeah.
So the allocation of capital, I guess it goes back to what you were saying when you first started off, which is you can't sit back and wait for the market. You've got to be in control of what you can be in control of.
Yep.
And you feel that the allocation of this capital will have a multiple return when the time comes to do a deal.
I think particularly with respect to Duparquet, starting to demonstrate, this is a project with 3.5 million ounces of indicated and 2.5 million ounces of inferred, literally in the middle of the Abitibi Gold Belt. Demonstrating to the industry that we actually really understand it, and there's a really clear path to grow it, is starting. It may not reflect in the share price today, but what it's starting to do is really reflect in the interest of other, larger producers in understanding it better and helping us kind of think about what the path forward is for that asset as well.
Right.
So I go back. We have an interesting slide in our deck which shows almost every project in Canada, 5 million ounces or more, over the last 5 years that has got its environmental assessment approvals, has been purchased for $500 million or more pre-construction. Pre-construction, and go back through the list. Back River was 1.1 billion. Blackwater got bought with the stream value of in excess of 500 million. You had Greenstone that got bought for 600 US pre-construction by Equinox and Orion. The list goes on and on and on. If you look at the JV, the values that JVs got funded into these big projects, it's not a stretch to say we have two projects that all the benchmarks would say are worth $500 million plus. So, we just gotta keep moving forward. As we said, we're coming into the environment where that value is really going to be recognized, because this is the time when the industry is going to need them the most. It's the time of maximum constraint on supply of those projects.
Yeah, I say gold price isn't going to hurt amongst all that mix as well. In terms of, you know what I mean? In terms of loosening the purse strings. Now.
Yep.
And I think the general consensus from what I'm hearing here, and I don't know if people like drinking the Kool-Aid or not, but I think everyone in this space would believe that gold is set a new low.
I think that's probably right.
Right?
Yeah.
And then really it's kind of question of where it can go from here, and how margins continue to be affected, because it looks like interest rates seem to be settling. Price gouging seems to be normally, I shouldn't call it that.
Yeah.
Costs seem to
Cost
be
inflation.
settling.
Yeah.
It's gouging. And that therefore margins are better understood going forward. So I think that's good news for the market.
Well, I think when you look at construction too, what a lot of people forget is that the price of steel is off 35 or 40% from where it was kind of in the peak COVID crunch on supply chains.
Yeah.
The price of oil, around $70 a barrel US. These are, pretty cyclical lows in the input commodities into a mine, right?
Yeah.
So it's quite different even than when we looked at recosting just internally, recosting Springpole last year. The economics are pretty different when the oil price is $90 and your steel price is 25% higher. So I think there's.
Or someone said to me, or if cement's come back down, or the cost of the third highest cost of the mine I was talking to in Australia, tires.
Oh, it's always a huge cost. Yeah.
It's like,
By the way, it's
what?
that's a total like oligopoly, and you're probably never getting the price of tires down. I mean,
Right.
like labor, right? We've had
Yeah,
labor
yeah.
inflation. It's probably not coming down. Although, we do have to point out to people, there have been 7 mines, major mines, built or in construction in Canada over the
Yeah.
last 5 years.
Yeah.
Never had that pace of construction activity in the mining sector ever. Had it in the oil sands for sure. We've never seen 7 major mines built at the same time. So was there inflation because of that? Absolutely there was. And again, you come in this period now where there's maybe 2 mines going to be built in the next 7 years. Like, you get the best people to come and build your mine, even if it might not reflect in rates, but you certainly get better teams, you get better execution. So it's a really interesting time. And that, for us, we got a bunch of wood to chop, particularly on the environmental assessment process, and, very important work over the course of the next year and a bit, but you're just talking about, one of limited opportunities for construction of a real.
And my takeaway from this conversation is that the people over there, and I'm talking industry money, I'm talking institutional money, and the deep pockets,
Yeah.
they understand where you're at and where you kind of sit in that mix. It feels like
I think
finally.
they're starting to.
Right,
I think they're
okay.
starting to. The number of people who we've met with, having had probably 70 meetings in the last week,
Yeah.
who have said at the end of a meeting, like, I really didn't know that you guys were this far advanced. We've been telling everyone.
Yeah.
But, I really didn't know that this, like, you're serious. You're submitting your final EA.
Yeah.
You've actually been all the way through the federal and provincial process. You say, yeah. Okay, well, let me roll up my sleeves. Let me do some work on it. So, no, I'm optimistic. We've had great reception from investors. I think that the pieces are starting to come together, which is nice. So we'll see. Keep our head down, keep driving forward, and we got lots of major milestones coming here over the course of the next 15 months.
Good man. Thanks
Pleasure as always.
for the update.
Absolutely,
Cheers.
yeah.
Bye.